Can you confirm that report that you plan to possibly move up to 30% of your notebook production out of China?
Well, look, Paul, it's good to be with you. Obviously, I can't, I'm not going to comment on rumors or speculation like that. I will tell you that we have a global supply chain that has flexibility in it. We have 25 manufacturing facilities across the globe. And, we're balancing the needs of our customers with the, with the environment that we're in. So I think we've done a nice job of balancing the tariff dynamics. And we'll continue to work our way through that, and hopefully the two governments will come to an appropriate agreement at the right time.
All right. Well, you described that report as a rumor. Is that then exactly what it is? Is that all it is?
We haven't commented on that. We're continuing to run the business, and from our perspective, yes, it's something that people like to speculate about, but we're going to continue to focus on our customers.
So what does that mean in terms of adjusting your supply chain? So you talk about 25 manufacturing sites, but when will you have to start adjusting prices, or have you started doing so already?
Well, if you recall, it's a great question. If you recall, we've been able to, there's been 3 tariff lists that have come out that we've been able to navigate so far. And by far, we've been able to mitigate the impact through shifts in the supply chain and working with our supply base. We have adjusted certain prices on a small minority of products just as a result of our inability to mitigate it. So while we've done some price adjustments, by and large, we've been able to offset the impacts to date.
So what products are taking the biggest hit from the tariffs?
Well, if you look across our global product line and product set, we've had to work our way through, some of the storage devices and our network devices. So, the ones where we adjusted pricing has principally been in small elements of our networking product line.
You also say that you've been, expressing your views on the tariffs to the government. Can you give us some idea of what you've been expressing exactly?
Well, when you're running a multinational global company like Dell Technologies, uncertainty is an issue in terms of how you plan your supply base and you plan your production. And so our comments to the administration have been around, what's the framework that we should be working towards. We have expressed our point of view that we would like to see a trade framework agreed to that lays out the rules so that, companies like ours can certainly navigate the environment that we're in. We believe in free and open trade, and we're hopeful that the administrations for the respective countries will come to an agreement.
Given the rhetoric around the trade war, have you detected any change in sentiment towards American products and companies such as Dell in China?
We have certainly been thoughtful about that or worried about that, but to date we really haven't seen an impact to our domestic China business. And we have quite a large domestic business in China. It's our second largest market. It's shown good growth over the last number of years, and we've been in China for over 20 years at this point. And so we're hopeful that the tensions will reside and allow companies like ours to continue to work in the respective markets. But to date, no, we really haven't seen an impact to our local business.
You are, though, seeing some impacts just from the cycle itself. You have talked about softness in China's servers market, for example. How is Dell planning to navigate that?
Yes, it's a great question, and yes, we're coming off an extraordinary strong fiscal 19 in terms of technology investment and technology spend, and we're in a long-term and technology investment cycle. But having said that, we have seen some softness in parts of the globe on servers as we moved into this year. So our balance and what we're driving right now is, we built the company to grow under various market circumstances, and we're focused on taking share and growing revenue despite what the local circumstances might be. And so right now our focus is, let's drive growth where we can get growth. Let's make sure we're balancing our growth and profitability and delivering the right results for our investors. And that's what we've been focused on. And we had a very strong Q1 from a profitability perspective. And so I think we're well poised to continue to take advantage of the conditions that exist.
Where would the biggest opportunities for you be, and what are you seeing in terms of corporate IT spending now?
You know, I do think that corporate IT spending has slowed. It's still growing. It's still, but it's clearly not as strong as it was a year ago. So companies are continuing to invest in new modern infrastructure. They're investing in, cloud environments for private clouds. We're well positioned with our multi-cloud and our hybrid cloud solutions that we've rolled out. There's clearly investment happening as companies are thinking about advanced analytics and data analytics to help drive insight. And as you both know, clearly with the data explosion that's happening, companies are continuing to invest in storage capabilities and data center capabilities to handle the enormous growth in data that's happening. And as you know, data is projected to grow, to double every 2 years at this point in terms of the size of the data pools that are out there.